New low DAX.
Good morning, traders. It is 8:01 a.m. Chicago time on Monday. Happy Monday to all. December 5th, 2022. This is episode number 2370. A quick reminder, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, what do we have? We have Tesla kind of whipping around on news that production is not going to be met out of China. So Tesla was down as much as I think 5%, has made a recovery, down 2.6% currently. Not sure that data may be delayed. Lots and lots of China reopening news right now, which is crude bullish. In addition to the fact that OPEC has decided to hold production steady until the next meeting, which is February 1st. So China is kind of being the bright star right now in terms of supporting the global economy. As you know, there have been tons of protests, and folks are not willing to stay at home anymore. So that's where that stands. So that's the big news. The S&P has been selling off a little bit. You can see that the market posture overall is mixed to slightly down, and nothing really major going on in terms of news flow and whatever's coming across the tape in the overnight session. Looking at this morning's calendar, there's been a couple of numbers out of Europe. I'm not going to cover the numbers. We do need to pay attention to the ISM non-manufacturing PMI this morning at 10 a.m. And then this evening, we do get the Reserve Bank of Australia's interest rate decision. Crude also has the the news that Europe. Excuse me, one second. The news that Europe has agreed to put a ban on buying crude for more than $60. So that's expected not to impact supply at all, really. Not sure what the effect is going to actually be versus the design, but that's the other news. So this is where we are. One of the things I want to point out to you, of course, every Monday we update these numbers right here in the gray box. Very important to note, we added these little arrows to give you an idea of where we are versus the prior week. So rotations have gone down to 7 points. In the S&P, the NASDAQ, they've gone down to 25.75, the RTY. So you could see overall in the indices, the trend in volatility is downward. Which is somewhat, you can read into it that that's somewhat bullish, but it could be the market just standing by given the Fed pivot for next week. But do make a note of those rotations because they matter when it comes to setting stop sizes and things like that. Looking at the S&P, the S&P is in a multi-distribution profile. It's got 3 distributions. It's been selling off. Only 181,000 have traded so far, which is in line with the prior sessions before Friday's crude. So the volume's not all that great, and then or unusual. And then the range is not all that great. The range is 31.75 points so far, relatively small. Point of control holding steady at 40.70, basically where we had it on Friday. I think 40.75 or so on Friday. So nothing too dramatic there in terms of the S&P. Look, this week is expected to be choppy. The Fed has gone into the blackout period. There are going to be very few or much fewer kind of news-based moves. The Fed speakers cannot speak, and so this week is going to be about waiting for the PPI release on Friday. The key numbers this week are what you have today: the non-manufacturing PMI from ISM, the Reserve Bank of Australia's rate decision. Then tomorrow we have balanced trade out of the U.S., GDP growth out of Australia, balanced trade out of China. And then Wednesday, just a couple of Australian numbers. Thursday, we get the inflation rate out of China. That's going to be important. And on Friday, we have PPI. That's going to be important because that feeds into the Fed decision next week. And then Michigan sentiment prelim, which is definitely a mover. So the bulk of this week is really quiet with the Fed in a blackout period. Expect a really sideways, bouncy, choppy kind of trade. I'm setting expectations here. That this week is likely to be very, very quiet as we prepare for next week's big rate decision. And this decision is significant because we've been going at 75 basis points, and the market gets to see if Fed's Powell is true to his words that they expect to increase by 50 basis points going forward. So they're starting to slow down the rate of interest rate increases, and that's going to be significant for the market, and that's why we've popped up, and we're here hanging out in the mid 4,000s. So just coming into this, be aware of that. Let's take a look at what was expected on Friday. So Friday, the main expectation, given that we opened below the prior session, Friday was non-farm payrolls. Remember, the payrolls came in strong, so the market sold off. That was in here. And then we opened below the prior session. And the expectation here is that it would likely test the 50 right there to the 54. And that was the key, is how does it treat the 50 to the 54? My expectation is it's likely to be responsive. I'm expecting it to be responsive up into the 50. I'm expecting it to struggle between 50 and 54 and roll over to push down into lower prices, 4,000 and so on and so forth, with a key number being 39.70 right here. So that was the plan on Friday. Here's what actually happened on Friday. So Friday, remember, the blue profile is for RTH. The orange profile is for Globex. So Friday, we open up. We immediately go to the 50 and sell off. So I'm not interested in the run up. I'm interested in the retest of this of this push to the 50. So we end up holding the 50 on a first test, and then we end up holding the 54. So it was really hard to see an edge on the long side on Friday. So the 54 presented an opportunity. A nice little pullback here presented an opportunity for short back to the RTH VWAP mid, and it just seemed like the market could not get through the RTH VWAP and mid. Right there, right here. It just, of course, in hindsight, you look at it and you're like, oh, why didn't I get long? But the fact is, the plan was for responsive buying to sell. And, oh, sorry. Yeah, let me turn that off. Yeah, thanks for letting me know. And so it was really hard to see that in the moment on the hard right edge. But ultimately, once we took out the 54 right in here, once we poked through the IB, if you're in the conversion trading Maven's chat channel, where I post my thoughts on the markets, you probably saw that I said, look, once it pokes through the 54, I'm off shorts. And that was the right thing. It pushed back to the anchored VWAP, pull back around the mid, and then we end up running into the close, which I wasn't here for. So overall, Friday is pretty bullish, right? We come right back toward the prior day's range. So this is the prior day. Oh, that's crude. This is the prior day's range right here. Balanced day, open. That's the 54 that I was talking about. 54. There's the 50 I was talking about. And then what we did on Friday is we had a lower high back into the range. We tested the prior point of control on the close right here. Poked through by a few ticks this morning or into the close on Friday. But overall, we had a market that basically came back into balance, came into Thursday's balance on Friday and put in a point of control inside of Thursday's range, inside Thursday's value area. So this is the beginning of what I expect to be a pretty balanced kind of trade up here until we get into the PMI later in this week, PPI, PMI, and then, of course, the Fed decision next week. So overall, the plan for Friday, the key trade for Friday worked for about, a 10-point rotation or so. And then as a result, the run-up was missed as I was looking for it to pull back and fall off, given the unemployment and given that balance was down below. I did expect the market to roll over and test that overnight point of control stat. Friday did not tag the overnight high or the overnight low. Friday was an exception. That was another statistic that I was gunning for on the short side. It did not work out that way. Here's the overall TPO picture. So you can see there's still this structure down here, this weak structure down here, and that goes down into the 70, right? So this that's where the 70 comes from. You have single prints all the way down to the 70. You have one-time framing down based on Friday. So now we are at 40.44. We're at 40.44, and we have the point of control above us. We still have the 54, 55, 54, 50 in play. And it's like we come in today after a strong push up on Friday on the close. We come in today, and I'm basically confronted with the same kind of situation without the gap this morning. So we are still below the area, the resistance area that was established on Friday. We basically turned around and moved below it. We still have this notch out in the profile. We still are below the 50-54, and that's very significant for today. So let's do a little bit of dissecting here in this composite profile. This is clearly a balanced day, so I'm going to just move it over. This is an imbalanced day, but it has reverted, so this has to be pushed over into this profile. So all I'm doing is I'm taking this and adding it to this big balance profile to find out how value is moving. Okay, so this is a rollover of balance, again balance, and then now we get this imbalance profile from the Fed's Powell talk, and so I have to stop. I can't add this because this is truly an imbalanced profile. This is a breakout of balance. But now we have this even bigger composite balance. This is, again, time-based right now, not volume-based, so it's a little bit different. Close enough. And you can see that we're still holding above this balance zone here. In my opinion, it's hard for me, given that I've been using volume profile, market profile for 17 years now, since 2005 or so. It's hard for me to see anything but the market kind of correcting these structures and coming right back into balance, potentially all the way down to 70. Now, look, I'm not going to be stubborn here. I got to trade what price is saying. But in the bigger picture, this is what I'm seeing. I'm seeing this thing rolling over, and it's having a hard time staying lower. But to me, it's hard for me to not expect that we would fix these structures all the way through to the 70, bringing us back into this major balance just to the left, which started in the middle of November. Okay, so this is how things are. I'm going to keep this thing just as it is. I'm not going to consolidate it because consolidating this profile into the prior isn't going to tell us much, right? It'll give us kind of a more obvious resistance point here, but it's too soon. It's too soon to judge it. I'm still going to take the 50 for what it is. I'm still going to the 54 for what it is. I'm still going to take the 50 for what it is and trade based on the relative strength that shows up in the market today, tomorrow, Friday, and into the FOMC. And I'm based on that, I'm going to judge the action. Okay. We may, this may have been a bottom. I think the bottom was put in on CPI. That CPI number, when it came out, it really put in a bottom. And I expected that, and I commented on the idea that is probably a swing low for a long time to come. And I still believe that. The market is at this point where there are some indications that things might stop getting harder in terms of interest rates and the yield curve, but there's still a lot of risk overhang in the market. Everything from war to jobs to the economy to what the Fed will do. Inflation's still really elevated in Europe. I think it came out at 10.3 or something like that last week. So all of that has to be digested. So we're at the upper echelon or the upper kind of end of value in terms of price to earnings on the S&P 500. So all of that taken into account. Again, that's a lot of analysis. And that's macro. But for price, we're still using the same principles. Okay, looking at the relative delta this morning, relative delta, much of the session was sideways, so was relative delta. There was just very poor participation in the overnight session, and then we started to sell off. Once Europe came in, we started to sell off, and we could see that relative delta started to sell off as well. Relative delta is controlled by the small lots, probably going to lead to chop on the open, expecting it to be relatively choppy. So coming into today, that's what I'm seeing. Let's take a look at what's expected here. Again, we put in a high, lower high. We are again below the 54 and 50. So I'm going to put this box up here again. This is an important box. And then the expectation for the primary scenario here is we're still at the low end of the range. I'm expecting this thing to immediately push lower. I'm expecting it to exceed the low of Friday. I'm expecting the low of Friday to be taken out. So it's likely to be choppy, but work itself back down into this lower distribution and back to the 40-20 area. And if it gets to 40-20 and can't hold, this brings us back to the 40-10, 04. And man, we are now working through those single prints down below. And that brings us back to, yet again, the 70 long term. Not expecting it today. The Monday after non-farm payrolls tends to have a tighter range, less volume, and more chop. And this is a Monday after a non-farm payrolls. Okay. That's the primary. The secondary, open auction, it tags the low, impulses up. We get buyers stepping in here and bringing us back. And then what this is, guess what this trade is going to be? There's a name that I give this trade, right? If it gets below the overnight low and then it springs back up, guess what that trade is going to be? That's going to be a gap to settle trade. Gap to settle. Settlement up here at 40, 75, 50. And if you look at the composite of these two areas, 40, 75, 50 is key, the key area up above. So we're looking for 75 on scenario 2. So scenario 2 is a gap to settle return up to where we finished on Friday, and basically the auction resumes from there. Okay, so scenario 1, unable to hold these prices, one-time framing continues, and we are working ourselves back to the balance right after the non-farm payrolls release of 40.20. So I'm looking for it to kind of push itself down to 40.20. Gives us about 27 points, 30 points of range or so. Still seeing 50 and 54 as resistance. They were support. If you look closely, the 50 was support briefly before the run up on Friday. So resistance turned support, very classic, this 50 area, okay? And if we, since we're below it, if we cannot get above it and kind of hold it and start pushing higher, if I see that we get above 50, pull back, and the buying is weak on the pullback, that's a setup for me to get long, looking for the gap, the settlement price of 75, and that's scenario 2. Otherwise, drop through the overnight low, try to push back to 50, unable to get to 50. Now I'm looking for shorts, and I'm looking for 40.20. And if it cannot hold 40.20, it takes out Friday's low, it could run quite a ways, 4,010.04, and we can only hope 39.70 in that scenario. Those are the plays. A quick look at crude oil. Crude has been very interesting. I don't know if you trade crude or not, but crude, filled in the single prints from way back and then rolled over on Friday. Rolled over, finished week, and then today it comes in with news and it opens near highs in a gap up and it's holding steady. For those of you who follow my commentary, it's at Convergent Trading. It's not public, but I talked about this being a key day here. I'm going to show you this on the volume profile, which is much better quality to look at. Look at this thing. It sells off, then it comes back. So this is Saudi Arabia recommending 500,000 increase. Comes back, so the market drops, comes back, the news is discounted, balanced day, breaks down, tries to swing back up, and then falls off, and then it just ran out of sellers here. This day here, very important, it ran out of sellers. This day is a benchmark low. This is a significant low here. Crude is not likely to see that 73.60 area for a while, in my opinion. Crude is very likely to continue back to the 90 from here. This is my view on crude. We're gapping up. I suspect that it'll probably pull back a little bit, but crude is likely to take out the prior week's high and push higher from here. That's my expectation on crude, okay? Good luck, and I'll catch you tomorrow. Take care.